Guy Goulet. I'm the Chief Executive Officer of Cerro de Pasco Resources. I'm here today with my colleague, Executive Chairman of Cerro de Pasco Resources, Stephen Zadka.
Hello guys, welcome to London. What are you doing over here?
Oh, we just attended the Raymond James conference.
Okay, and what's that about? Are they focused on any one thing?
People have checked what we have done over the past few years. We're achieving milestones, so we got funds interested in knowing more about what we're doing and what are the next milestones.
So, and what type of investors are we talking about? Institutional, retail?
It was all institutional.
Right, okay. The interest is back from institutionals.
Yeah.
Good.
I was high level, really high level.
Okay. We won't name drop. We'll protect the innocent by not mentioning them, but the likes of BlackRock are here, I'll tell you that. You're not actually a mining company though, and you're at a mining event. Is that fair to say?
Well, we're a mining company, but what we're doing, we own the mineral rights on what we expect to be the largest above ground mineral resource on the planet. And well, it's above ground. It comes from what used to be the largest gold, copper, silver mine in the world, financed at the time by Mr. J.P. Morgan himself back in 1906. So they extracted from that mine 300 million tons. So we own the mineral rights on the stockpiles and the tailings coming from that mine. It's an emblematic mine.
Okay, so but it's all. But the point is, it's all above ground. So do you look at yourself as, okay, you are a mining company of sorts because you're in the extraction business, but you're also in the remediation business, aren't you?
Yeah. Well, you see that these tailings and these stockpiles produce acid water. And these tailings and these stockpiles are right in the middle of a community of 67,000 people. Okay? Nobody thought back at the beginning of the 20th century that putting a stockpile and a tailings would attract a lot of NGOs today. We didn't do that, but we're going to correct the situation. And our shareholder will benefit of that.
Okay. Got to talk to you.
Sure.
What did you buy into when you saw this project? What attracted you?
What attracted me was virtually no exploration risk.
Right.
So coming from investment banking, metals and mining, and let's say 2010, invested in a lot of exploration companies, and I saw them drop 10, 20, 30, 40, $50 million into exploration, only to find out it wasn't large enough, the grades weren't good enough.
They didn't find enough.
They couldn't raise enough.
Yeah.
To find enough. And when I saw this project, I said, well, this is really large. This is 75 million tons of material sitting on top of the ground. I did some research on Cerro de Pasco, and I understood that it was one of the richest mines in history. And I had some idea of the grades that were encountered in the tailings through some auger sampling that was done a ways back, so I put two and two together. I took those numbers and I extrapolated over 75 million tons, and there's quite a bit of silver in here.
Yeah, there's quite a bit of silver here, but the thing that interests me in terms of, because I'm going to go not no mining risk, there's less mining risk in the sense that it's all above surface, and therefore there's a cost component to that. You save a lot of money,
save a ton of money.
Right.
Listen, I think the hardest part of mining is mining, right? So that's where your biggest risk is. It's not processing. Once you've got the process down and you've got a processing facility, you don't need a genius to run a processing facility. But mining is a very difficult endeavor, right? You have underground mining, which is highly, variable. Even your predictions may not pan out as planned. You have areas where you're going through for narrow vein type of in some cases of ore, and you have dilution. You have high costs. You've got to develop. So you could see in an underground mine, your cost could be $50 to $250 per ton, right? And then you have dilution factor as well. Could be up to 50, maybe 60, 70% in some cases, right? Depends on how narrow those veins are. And then even in open pit, you have dilution and you have strip ratios. So that could go from, $3 a ton to $20 a ton. Really depends on the strip ratio. And then tailings, you're essentially able to extract material at $1 to $2 per ton with virtually no dilution, right? And you can do it day in and day out with one or two pieces of equipment. You don't need thousands of people. You don't have equipment availability issues, right? Equipment availability show me one mine that has 100% uptime. It doesn't exist, So you need to constantly be buying new equipment, maintaining your equipment, a lot of equipment, right? So there's a lot of challenges. There's a lot of operational excellence that comes into mining that makes it very difficult.
See,
and hard to predict.
What interests me about this is you're focused on the economics straight away. You see this as right. I got to raise less money, therefore the kind of cost of capital component kind of falls away. I need to hire less people. I'm reducing the risk because that has a kind of cost component you've got to factor in as well at some point, right? And yet there's very few companies do what you guys do, right? There's not a lot of the companies that get in and chase tailings as a core competence. Some people do it on the side, but as a core competence. Why is that, do you think?
Because I'm personally not a geologist and I'm not an engineer. I'm an entrepreneur. I was in real estate before entering into investment banking, focused on metals and mining. So my competence is to find value where there's an opportunity, and this was clearly an opportunity. And I think that in some ways it's beautiful that this opportunity is also an environmentally friendly opportunity, and it's going to have positive impacts to the environment.
And pro-social.
Right, so we have all these winning conditions.
We're creating the wealth back in the community of Cerro de Pasco. That mine used to employ 7,000 people. Today that mine barely employs 500 people. What do you do at 4,400 meters above sea level? There's no agriculture. There's only mining, and people up there are minded.
Mind-minded, I like that. Well, let's talk about that, because in terms of one of the other risks that you guys you must factor into your thinking is when you look at conventional exploration, development, and mining, is the community component. So remediation, I don't know many people say no, we don't want things remediated, but how are they involved? How are you getting to buy into this? How do they support you?
Well, again, there's a problem of poverty in Cerro de Pasco. Okay. That mine used to be the cash cow of the country. It's not anymore. The pit is closed.
Yeah.
Okay. But that mine was operated very aggressively historically.
Right.
It was a machine to print money at the time. There was dynamite, trucking, dust, noise, 24 hours a day. So now we're coming back here. We're creating the wealth back in the community of Cerro de Pasco, but we're eliminating all that, the trucking, the dynamite, the dust, and the noise. The community want this project to move forward as soon as possible.
Right.
Stephen and I were talking with the mayor of the community. They call him the Presidente. And he was mentioning, he says, casual discussion, we all want our children to go to college and university in Lima. We just don't have the money anymore. And he was pointing out that stockpiles and these tailings. And he says, this is what's going to send the kids back to school.
Okay.
Because we're happy to do that. We're proud to doing that. And in addition, we're pretty sure our market cap will perform well. But doing pro-social and pro-environmental at the same time, it's it make you sleep okay at night.
Yeah, so obviously jobs, money into the community, etc. What else are you doing over and above, giving people jobs?
Well, I'll tell you something. That's interesting because there's only one way to remediate the environment in Cerro de Pasco. You have to reprocess the tailings and remove the stockpile from where it is.
Yeah.
There is actually no other way to sustainably close or bring Cerro de Pasco back to a natural state without taking those tailings in the stockpile. Scientifically, there is no other way.
So what does this look like? And eventually, right? Okay, so you've got all this stuff sitting on the surface. It's a bit, someone's left it behind without much thought. They've been under it, and you're going to sort that out. But what's the end game for again, sticking with the community thing? What's the upside for them? We got the job bit, we got the money bit. What does it look like at the end of this?
I mean, they're going to be beneficiaries, right? For sure, to some degree from the benefit of this operation economically, and they're going to be in a better off position than they are today. As Guy mentioned, the poverty issue is a big deal over there. You have people living at 4,400 meters above elevation every night. It's freezing. There's no hot water. There's a lack of potable water over there. So this is another problem. So with what we're doing, we also hope to restore water flow to people and to provide them with the opportunity to have also better housing and heating in their homes, right? And so these are and there's another thing. I mean, naturally, this area of the world contains lead in the soil. There's another area, I think in Australia, similar to this area, which naturally has high ppms of lead in the soil. So nobody knew, but if you're living on top of a mine, then it's not, there's the chances of soil coming into contact with your hands and then coming into contact with your mouth are quite high, right? And especially for children. So it's not the greatest place either to be living, in terms of health, right? Because of that reason.
But they're seated on
There's a tower
it's a
literally on the
natural,
mine, isn't it?
it's a natural geological accident, like mining or not mining. It's there, and they're living there.
Right. Let's talk about the extraction part of this, which is or the process part of this. So it's a polymetallic deposit. The grades are high across the boards. In fact, you better remind people what are you extracting and what the grades are, and then we'll kind of get into the how.
Yeah. So I will answer why the grades are so high. We look what we have done. We were to buy Cerro de Pasco, the mine, from Vulcan at some point, and we didn't do it in 2020 mainly because of COVID. Okay, we need the mine. Most of the mine in Peru were shut down. Peru was one of the most affected country per capita in the world. And so we did intense due diligence, and we came out knowing that they had recovered only 60% of the metal. And we tried to know why was the recovery was so bad. So obviously it was the beginning of the 20th century. The reagents were not so good. The grinding was not appropriate. But if you go back in time, that was the largest mine in the world. They were extracting 20,000 tons from that pit every day. They were processing 13,000 tons. They were stockpiling 7,000 tons. And the process was a flotation process. So when you do flotation rapidly, in 24 hours, you're going to recover 60% of the metals. If you keep the flotation process going for 72 hours, you will end up recovering 85 to 87% of the metals. So go back in time. It was the largest mine in the world. You got every morning 20,000 tons, of which you can recover within 24 hours 60%. Why should they avoid an extra 48 hours to gain an extra 25%? So what they were doing, they were throwing that rich material away. This is why these tailings are the richest in the world. You take the average of the tailing, the polymetallic, you put that in silver equivalent, it's more than the average of the underground mine on the planet, and it's above ground. As Stephen was mentioning, let's call average of when you produce base metal or precious metal mining, generally it's around 40% of the cost. There's no mining cost there. Count $1 per ton.
Okay. So margins are good.
Yeah.
And we don't have any. There's no. Like in mining, the EBITDA line is very tricky, right? Because AISC,
We play with it.
all-in sustaining cost is
Yeah.
very tricky too.
Yeah.
My all-in sustaining cost for this month was $20 an ounce of silver for this quarter rather. But how about next year when you've got to go and do 1,000 meters of underground development, right?
Yeah.
So this is a very tricky thing.
Yeah.
We're not going to have this immense sustaining capital expenditures.
But you sound like the kind of guy who's focused on the reality of the cost, not the having to report. Because I always think from my as an investment banker, when I look at the ASIC, I'm like, okay, what assumptions are being made here with this particular company? They have to play with this a bit.
Yeah,
You're focused on margin. That's cash, making money.
Yeah, but I mean, the reality is there's a lot of companies, and you look at them, next Vulcan, $250 million EBITDA, $500 million EBITDA. What's the free cash flow? Minus $100 million, minus $200 million. Why? It's not the debt. It's the continued development that they need to do in order to sustain their operations. It's more than the cost. It's more than the profit that they're making. Yeah. It's more than the EBITDA. Yeah. You know what I mean? So this is the conundrum of the problems in this business, right? Yeah. And why these prices are not even sustainable today.
Yeah. I 100% agree with you. You want to kind of have these numbers based on reality, not some sort of financial fantasy for sure. Let's get back to the process. So there'll be new people watching, listening, and reading about this. So let's talk exactly what the process is. Okay, it's all sitting at surface. Yeah. You've recently drilled a lot of 40 holes, I think, just confirmatory in terms of the grade is what we think it is, and it's fairly systematic process you've been through. But what do you do with this pile? How do we process it?
So first of all, you were talking about the drilling. Mm-hmm. So we did the first phase, 40 holes. And we had, remember I talked to you about the compilation we did from the monthly report from 1906 when Mr. J.P. Morgan made the investment until 1992 when they stopped sending material in these tailings. And we compiled that and we drill it. And we are exactly where we expect it to be.
Okay.
And in addition, we got a little cherry on the Sunday. We've got a lot of gallium. Okay?
Yeah.
So.
Okay. So you've found this opportunity.
Yeah.
You've got all these tailings at surface, a lot of it, high grade material. How do you process it? How do you extract the value?
Well, first you need to extract it. Right, so we're going to do that through slurry pumps on pontoon barges. It's off-the-shelf technology that is widely used in the mining industry, in tailings, and even moving tailings from one location to another. Sometimes you want to do that, in order to create more stability within the tailings dam. So that's number one. So it's going to be slurry to a processing facility. And then it goes through a system of hydrocyclones, and then you do some pre-treatments before it ends up in a processing facility. But in our case, what we're focused on is flotation, and we're in the middle of mineralogy and metallurgy, and we're focused on where the precious and the base metals are sitting. And what size fraction they are in. Do we need to regrind? how fine do we need to regrind? Do we need column cells? All these kind of things. So we're going to be looking at how to optimize recoveries, and ultimately the goal is to produce concentrates, right? A zinc, a lead, a copper concentrate, maybe a silver iron concentrate. And this is how we would extract it, process it, and eventually generate value from it.
So this process, this kind of pontoon barge type structure and using water just kind of to move it, is that expensive?
No, actually, we costed it a few years ago. The slurry pumps and the barge were about, I'd say, $2 million per unit.
Right.
Yeah.
And how many units are there?
And one unit could do, 10,000 tons a day? It was something, it was unbelievable, yeah.
We can do that day and night.
Day and night as well, because there's no noise, no dust, etc. Is that, so that's obviously cheaper than buying a fleet of equipment or leasing a fleet of equipment.
Yeah.
So you're moving it much more efficiently.
Oh, yeah.
Right, okay,
Yeah,
interesting.
you just pump the material 24 hours a day. Like we're going to move the material on something like less than 2 kilometers.
Is there a water source there? I mean, where's all the water coming from?
It's a former lake. It's
Okay,
saturated
so-
with water. That's why
Okay.
we need a pontoon.
Okay.
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 So when you do an excavation, it's going to naturally fill up with water.
Right, okay, fine. You've also got this gallium component.
Yeah.
That kind of made the headlines last year. Most people never heard of gallium, but all of a sudden the Chinese say no more gallium exports. So how does that affect your bottom
We
line?
checked the flow sheet at the time.
Yeah,
There was a lot of those critical minerals, indium, there was tellurium, silurium. We've never seen gallium.
yeah,
We drilled it. We knew there was indium, and we drilled and we assay for those critical minerals. And
Right.
we end up like first 8 drill holes was 23 gram per ton gallium. Whoops. And we're going more to the south. We publish another additional 8 holes. We combine. Whoop, we're moving up the average now at 30 gram per ton gallium. So after 40 holes, we're now at 53 gram per ton gallium. And the last 2 holes to the south average 86 gram per ton gallium.
Right.
So the next phase, we should have more gallium.
okay.
But Matthew, gallium, it's not a gimme. Right now, we've got the base metal and the precious metal. That's what we're heading for. It's just we were surprised we had so much gallium. We're checking what we can do with that.
So I know you're moving towards a feasibility study at some point next year, middle of next year maybe?
Yeah,
That's
middle
sort of,
to end of next year.
but what do we know now about kind of the base metals side of things without the gallium in terms of whatever economics that you currently understand?
So on the, it was a great drilling campaign. We did 40 holes from the bottom to the top of the 40 holes. It's 1.5 to 2.5 ounce per ton silver, and it averaged 4.3 ounce per ton silver equivalent.
Okay.
All of them, no gap. Never add 1 meter without minimum 1.
So fairly homogeneous on the base metals. You're not having to worry about blending and picking from certain parts of the stockpile at any one time. This is just simple.
That's it.
The slurry thing.
That's why we have started the feasibility study
Right.
without having the second phase of drilling done.
Yeah.
We're sure. We know what's going to happen in the next 60 holes.
So reliably consistent
Yeah.
for you at the moment. So let's bring the gallium component back in. So that bit of you said already, Stephen, that a lot of met work being done to try and understand where the curves could be, and then you're going to need to understand, how much can you recover, what these concentrates could look like. How much more work do we have to wait to feasibility to talk about met? We can hear about it a bit sooner.
But I'm hoping that we can have something solid by the fall of this year. Yeah.
Okay.
And we'll have answers, to gallium or indications about gallium at that point.
Right.
Yeah.
So we have to do the mineralogy first to know where the gallium is, where the silver is, and then we got metallurgy.
We're
going.
right in the middle of it, so
Yeah.
we were seeing things, but we don't know if we fully understand them yet, and we need to dive in deeper into some things. But it's looking quite positive, on the base and precious metals. I would say that.
But yeah, I think on the
And
base
that's the
case
core.
is good.
That's the core of the project. Let's not take this the wrong way. Gallium is great. It's a bonus. It's an interesting strategic commodity, if you will, right now. It has strategic importance to the United States. That can help us with funding. You know, we're working with the United States government now we're telling them about this opportunity.
Yeah.
You know, and you know, if the metal's there, you can extract it, but it may be a more complex process, right? And if you strategically want gallium, right, then maybe there's another discussion to be had. I mean, what a lot of people don't realize about these tailings is it's not only about base and precious metals or concentrates, right? This is naturally the simplest way to extract value from the tailings and produce concentrates. It's easy business. But there's another aspect here which is quite interesting, and it's why we have people like Bernard Dold, who you know was our chief technology officer. He's a world leading expert on pyrite, and pyrite, interestingly enough, has a very important value, right? And especially in today's environment because of desulfurization of the economy of the world, right? Because we're using less and less, how do you say it? Less and less hydrocarbons, right? So a byproduct of hydrocarbons is sulfur, right? So with less usage of oil and gas, let's say, you have less sulfur availability, and sulfur is very important, you know, in many industries. So pyrite you can create a lot of value from pyrite. You can create sulfuric acid. You can create ammonium sulfate, right? You can create direct reduced iron, right? And a few years ago, we were working on a technology with the German Aerospace Center to develop a way to electrolyze sulfuric acid, because the bond between, you know, if you want to create hydrogen, right, to create hydrogen, because in order to create direct reduced iron, you need hydrogen, right? So hydrogen, you know, you can create it through
Electrolysis of water.
Electrolysis of water.
And it costs a lot of energy, and generally they use coal.
Yeah.
To split the molecule H2O. Well, H2SO4, sulfuric acid, it's a weak bond, so it takes something like 7 times less energy.
Right. So anyway, there is a value to pyrite in that you could downstream pyrite to a coastal facility. This is something we're working with the U.S. government on, actually, a bigger project. So our new tailings might not actually be new tailings if we do something with the pyrite.
Right.
So let's put it that way. And when we look at the numbers this is very back of the envelope, right? For what we have in terms of pyrite, very back of the envelope. You're looking at NPVs of 8 billion, 9 billion, right? With IRRs well above 50, 60%. If you can produce DRI and ammonium sulfate from the process. I don't know if you know, but car manufacturers are the biggest consumers of steel iron, right? 28% of the world's iron is produced by car manufacturers. And they're always looking more and more for sources of green iron, right? And there's opportunities in Peru because most of the power is generated from hydroelectric. So it's already green. So combine that with the hydrogen that you need to generate to create direct reduced iron from the pyrite. Now we could create green DRI, which goes for a premium of $250 over the current price, which is like around $500 per ton. So this is very interesting from that perspective.
I will add something on the sulfuric acid.
Yeah.
Peru needs a lot of sulfuric acid to produce fertilizer.
Yeah.
Because 100% of the fertilizer were coming from Russia, and it's
Okay.
they have cut to zero now. So they need sulfuric acid to produce fertilizer.
Yes.
There's a lot of optionality here.
There's a lot of optionality.
Well,
here.
it's like my wife say, it's spaghetti sauce.
Yeah.
It takes time to cook. We
Yeah.
don't have to rush. We just have to. We have enough money. We have a large shareholder in Eric Sprott.
Yeah.
Okay. And all's described here. We just have to take the time, do step by step, and the feasibility. Check all the options, and it should do a very good spaghetti.
Okay,
sauce.
so I want to make sure I understand. The base case is the extraction of the polymetallics. I'm going to not even include the gallium at the moment. That seems to stack up based on what our conversations previously. We'll see what comes out of the network, and by fall we'll have a bit more clear about the metallurgy, and therefore what that potentially could do to the economics. You will release in the first half of next year a feasibility study, which will give us a better sense of the economics. Yeah.
Yeah.
Is that about right time?
Yeah.
I'm just trying to work out what I'm looking forward
Yeah.
to as the story builds, and some of this additional work that you're looking at with the sulfuric acid, obviously potential.
But still, it's early. It's early days, for that.
Yeah, I just want to know, but it's a work happening on the side or concurrently
Yeah.
to give you optionality.
Well, no matter what, the concentrator facility is necessary.
Yeah.
No matter what.
Okay,
Right.
okay.
We need the concentrator.
So we're not getting
facility.
distracted. We're saying
We're
it's,
not
a, it's,
getting-
a, it's an also.
We're not getting
Not an
distracted.
instead of.
No. We're not
Yeah,
getting
okay.
distracted. It's not instead of. It's the concentrator facility is not. It's not the base case. It's the case, right? Yeah. And the other part, and the other is an add-on, right?
Right.
So we're doing things in the meantime. There's things that you can do to prepare for that. Like we did a pipeline study.
Yeah.
To see how the slurry pipeline.
Yeah.
Material from Cerro de Pasco to the coast, for example.
Yeah.
Because if you ever want to put up this facility to treat to pyrite, given that it's 50% of the mass,
Yeah,
it's quite a substantial amount of material that you have to move. So you cannot be able to move that by truck. 200 kilometers.
Is that how far it would be?
It's about
Okay.
200 kilometers. Yeah.
Okay.
But it's doable. There's one right beside.
Okay. So it's been done before.
It's
so
done
we're not
before.
reinventing.
It's a 300
not inventing
kilometer
something.
pipeline.
Okay.
Yeah,
okay.
and Tamina has a 300 kilometer pipeline,
It's
and
doable.
they slurry 10,000 tons a day of concentrate. Actually.
Right, okay,
It's a massive
okay.
one. But the thing in Peru, when if you put a pipeline down, you don't need to make deals with privates, because there's a law that allows you to follow the road, and you have an
Okay.
automatic easement.
Got it.
So it's actually a very nice concept. You can really, it's not a challenging thing where you've got to make deals with hundreds of landowners,
Yeah,
right?
yeah.
That's where it gets difficult.
Interesting.
Yeah.
That's really interesting.
Yeah.
Okay. Well, we'll come back to that, I suspect, if and when we talk again in the future.
Yeah,
Because that
yeah.
sounds pretty
Yeah.
exciting.
Yeah.
Certainly.
And so there's another strategic angle too, because
Yeah.
there's two places in the world where you have the most pyrite: the Iberian Pyritic Peninsula,
Yeah.
right? And they're treating they're making sulfuric acid and byproducts in that
Yeah.
region, by the way.
Yeah.
Yeah, and Cerro de Pasco, right? So these are two regions in the world that have a concentration of pyrite, but in Spain they have a solution for it.
Yeah.
In Peru they don't, right? So it's not only the pyrite in our tailings. There's pyrite in the open pit. There's the mine next door, Buenaventura, Broquel. They have a lot of pyrite. They don't know what to do with it.
Right.
Next to Resources has a lot of pyrite. They don't know what to do with it.
Talk to me about the size of the market, though. I mean,
Yeah.
and maybe for people to explain the kind of use cases. Why is it important?
Sulfuric acid is
That is the number one.
no, sulfuric acid is the base. It's
Right.
it's the cheapest thing you can produce, but it's still important. The price is going up. I think the price is $300 a ton right now, but it's astronomically high because there's a shortage. But it should be between $100 $150 a ton. It's not. It doesn't cost nothing, right? And yes, and then from there you can produce additional products, ammonium sulfate. And other products, right? So it's iron and sulfur, right? That's what pyrite is. It's iron and sulfur. So tell me where we've a mining company has said, "Oh, my iron's worth nothing." I mean, we've seen projects where they're taking 32% iron and trying to convert it into 65% iron, and they're spending $1 billion on capex. I mean, and they're in the middle of the Arctic, and I think we've seen this story a few times. And they've got to get these boats that cut through the frozen waters to ship it out. I mean, this is no different, but it's you need to look at everything here, right? That's another thing. I think mining in general, people in the mining business, it's a little bit too conventional sometimes, very close-minded. Only underground, only open pit, only simple. And this is why there's so many problems created for mining companies. It's because they don't look for long-term solutions. They seek to make as much cash as they can on the outset, and they don't look for the future, right? And this is why there's so many problems today. This is why mines never close, and this is why there's a huge value in these tailings that are all over the world, right? Because why? If you wouldn't need to go open a new mine, probably, for hundreds of years if you just remined all the tailings in the world, right? And just cleaned it up.
Yeah. No, I agree with that. We've spoken to, and maybe even we can get you on and join them as a DRD Gold out of South Africa. We do know that, and that's why it constantly surprises me there's not more companies doing this. But for you guys, it's one project. You're very clear in your marketing material. It's like we're focused on one thing. We want to get that right. We don't want to spread ourselves too thin. Yeah, get the cash flowing, and then look at other opportunities. I'd say that would be for, I guess, people new to this and go, well, trying to understand how do you scale up, because it's very clear. I know what's on the surface. I'm looking at it, right? How does it get bigger? Does it go, we've got to find more projects like this, or is there other types of opportunities in the vicinity? How do we grow?
I mean, how big do you want it to get?
I just care about making money, right? Show me the bottom line.
I want to make money
yeah.
too.
There's 75 million tons there. And there's another stockpile of 104 million tons.
Okay, there we go.
It's
right.
like, why should we won't? There's enough there.
There's enough there. Okay.
When we finish processing that, personally, I'll probably be 6 feet on the ground.
Okay.
We get this a lot. We get this a lot when we're talking to royalty companies. They're saying, "Yeah, but I already know how big it is. It's not interesting anymore." I said, "What do you want me to tell you? A fantasy that there's 10 times as much?" So I'll tell you what. Let's cut it down to 1/5 of this size, right?
Yeah.
And I'll give you the blue sky fantasy that is 10 times larger. Does that make it more interesting for you? So it's a game. It's a mind game at the end of the day, right? You 20,000 tons a day. It's between the stockpile and the tailings. You had 20 years of mine life, right? Yeah. With the amount of money that we could potentially create from it, we can do a lot of other things with it, right?
Yeah.
So, and as I mentioned, there's this other project which could be 8, 9, 10 billion in terms of NPV with a very high IRR that you could generate from these tailings. So this is the growth, right?
Yeah.
That's the beauty of that project. It's one project.
Yeah.
No distraction.
Yeah.
We can, from that stockpile and that tailings, we can do so many things.
Okay, so it's kind of like, the thing I think I take away there is, there is scale there. It is 20 years. If you want to look in conventional terms, life of mine, call it that, use that phrase, like life of mine. But it's high margin. Yeah. That's the kind of thing to focus in on as an investor. So I guess people will say to you, right, okay, let's just take a look at the kind of register of people that you're attracting. You mentioned Eric Sprott already, right? How much does he own? What was percentage?
Well, he owns 17%.
Right.
Fully diluted, he owns 22%.
Okay.
So we are management, Eric Sprott, 3 institution. We own 40% of the shares.
But you got enough money now. You're not raising money anytime soon. You got enough money to take you through the feasibility study, right?
Well, we had some pressure on the share price lately because there were those warrants outstanding.
Yeah.
Okay, at 25 cents.
Yeah.
And they expire next week.
Okay.
So you can see, check the stock now. It's very, very firm. It's like you can see volumes picking up.
Yeah.
People know that those warrants will disappear. Okay? So we had to do some retail financing to start with.
Okay.
And by the way, if you check all the warrants outstanding, most of them are in the back pocket of Eric Sprott. And Eric Sprott does not need to sell shares to exercise the warrant. That's the beauty of having Eric Sprott in.
Okay. But let's like you're here at this conference in London. There's the likes of BlackRock and Ruffer and all the usual guys you'd expect to see. The big boys are here. You're one of, I think, 14, 15 companies that have been invited to come to this.
So it was a one-day conference. We met 7 of them.
Yeah. Okay. So
we had very good meetings.
yeah. So it's clear that your institutional grade and people are understanding the story. So I think that's really good news. Are you consciously looking to increase the amount of institutional holders in the stock?
Naturally. Naturally.
Yeah.
Matthew, that's what we're doing. The only thing we're doing now.
Okay.
I've been in that business for 40 years. I've done meetings everywhere. Every time I was going for a meeting, 99% of the time, I was looking for money. And now we've got, well, let touch wood. Okay, we've got enough money now. Okay. So when we go somewhere and people look, it's a good story. You need money.
Yeah.
The answer is no, not for now. Let's touch wood again, okay? But we were walking. We were at PDAC, the convention in Toronto, and we were walking all the alleys, all of them, 500 companies. Like there's no project like this one. This is the next mine, and it's a big one. It's the next mine.
No, it's very interesting for sure. And I think the great thing about bankers is they always offer you an umbrella when it's sunny. So the money will be coming.
Yeah. Well, it's a lot of metals. It's a lot of metals. The off-taker will be there also. When we publish the feasibility study, there will be probably a lineup of off-takers there.
Well, that's what I'm kind of interested in terms of this kind of not the share register makeup of that, but the kind of the financial position where you've established you're good for now. Well, feasibility study, that's the moment when you've got some decisions to make about the type of partners, if you want partners, and type of institutions you want to have in, because it's important to manage the register, right? And the access to capital to do what you want to do. I suspect you'll have lots of optionality there, whether it be royalty or streaming or debt or however you want to do this thing. With the off-takers, they must like the kind of de-risk nature of what they're looking at here, because it also feels like they're not going to wait a long time to get there. Yeah. So who would the off-takers be?
We'll see. There's going to be 20 of them lined up at the door, all competing with each other, as they would for any, not because we're special, but they would be doing that for any other opportunity. And then they'll provide their terms, and it'll hopefully it matches with what you're producing, and you get a good deal. And it depends. Like if we have some strategic metals and concentrates, maybe we might need to seek smelters directly, right, to get paid for it. Because the likes of Trafigura or Glencore will, they won't pay you for strategic metals, and the concentrate, right? So we'll have to see ultimately what the concentrate quality looks like. Yeah. And then it'll be a conversation.
Where does that get shipped to if you're looking and talking directly to smelters? I mean, I don't know what the makeup is in that part of.
Well, it also depends on who our partners are going to be. So if it's the United States, then you can't touch China. Yeah. So it's got to be a U.S. or ally of the U.S. Right?
Okay. Interesting.
Yeah.
Interesting. Well, guys, appreciate you coming all the way over here to see us. Lovely to see you, lovely to meet you.
Yeah,
we've not met in person, actually. And good to see you as always, sir. Jeez. Good to have you over here, and we will obviously follow you very closely. I think you've got a great story here. I wish more companies did what you guys did, because not only are you going to be making money, but it's doing good. So I appreciate that.
Yeah.
Thank you for the invitation, Matthew.
Good to see you.
Thank you.